Now, this video is for those of you who automatically think that owning any asset is a good financial decision, or think that anything, as long as it makes you income, is an asset. Let me just say that you're both right and wrong. Normally, one would think this. Assets are a good thing, right? I mean, companies own them, and the rich own lots of assets too, so surely they're a good thing. But let me ask you this. Why haven't you pressed the like and subscribe button yet? Oh, sorry, wrong line. What exactly do you think assets are? Again, the average person may respond, a house is an asset because it appreciates in value. A car is an asset because it can be sold for a benefit, i.e. its selling price in the future. Now, these answers are partially right, but in this video, I'm going to help you understand when these answers can also be wrong. And if you can understand these differences, then you can use them to your financial advantage. Okay, so whether, say, a car is an asset or not, or is good or bad or not, depends entirely on the perspective that you take when evaluating whether something is an asset or not. So I'm going to go through two perspectives that will help you be able to understand this better. So the first perspective is an accounting perspective. In accounting, an asset is just something that you can own that can generate you future economic benefits. So for instance, if a company like Toyota were to own a car as part of its inventory, then this will be an asset because it can be sold in the future at market value, and hence Toyota could generate a future economic benefit from this car. Similarly, if someone were to then buy this car, again, this car would be treated as an asset for that individual based on the accounting definition of an asset, as again, despite the depreciation of the value of the vehicle over time, he can still sell it in the future from some amount, and hence he can gain some sort of future economic benefit from this car or this vehicle. Okay, now, in my opinion, this accounting definition of an asset is something that you should understand. But for the average individual, this should not be what they use in terms of day-to-day financial decision making. And so, what's really important is that you should not be buying a car thinking that it is an asset and hence is a good financial decision. And of course, I'm sure a lot of you understand that. But I think what's important here now is this next perspective that I'm going to be looking at, and this is the perspective that I think people should be using when it comes to making good financial decisions. Now, I've named this perspective the cash flow perspective. This is just a name that I came up with, and what the cash flow perspective says is basically that an asset, a true asset, is something that generates you an overall net income or an overall net cash inflow. And so, going back to the car example, a car is not an asset for most, in the case of most people. It is of course a liability from this perspective. And the reason it is a liability is because there are more cash outflows than cash inflows during the course of the car's lifetime, or for the duration you own that car. And this is very obvious because we know a car depreciates every year, and this means that you will, in the end, when you finish using that car, sell it for less than you originally bought it. At the same time, when you own a car, there are running and maintenance costs, for instance, with fuel, or repair costs, say if a tire gets punctured. But to give you a deep understanding of this perspective, yes, a car is a liability, but now let's ask ourselves another question. Can a car be an asset from this perspective? Well, actually, yes, it can. One way that we could make a car an asset would be if that car was generating more cash inflows than cash outflows. And so I can give you an example of when I've actually done this from a real life experience. And this is actually from starting a car rental business, where you can actually purchase cars for the sole purpose of renting them out at a monthly profit, or monthly net cash inflow. And so in this case, a car is overall generating you an inflow and hence can be seen as an asset. Another good idea would be, say if you were a car reseller, you were buying cars for a low price, then you were fixing them up and selling them at a higher price, such that your initial cash outflows from purchasing that car are lower than your selling price of the car, or in other words, your cash inflows. So I think what's important to understand is that anything can be an asset as long as the cash inflows are higher than its overall cash outflows for the duration you are holding that vehicle, whether it is an investment vehicle or just a car. Okay, thanks for watching. I hope you understand now how one object like a car or a house can be both an asset and a liability, firstly depending on this perspective that you're using, and secondly depending on whether the cash inflows or cash outflows are higher from the cash flow perspective. And hopefully you can use this now to make better decisions for your overall financial being. Once again, thank you for watching, and I'll see you next time.